Greetings, members one and all of the Salivation Nation. With precious metals prices rising at a pretty rapid and steady rate, especially gold, and a little bit with silver now. Is silver the metal to watch for the future here? According to one analyst, he says yes. But let's explore why he may or may not be wrong. This comes to us from Kitco, and it is an article here saying that gold looks good, but investors should be overweight in silver, according to this analyst. It says while gold will continue to attract investors' attention as economic uncertainty dominates financial markets, one research analyst says that silver needs to be the metal to watch. A broad-based rally in precious metals markets Tuesday pushed silver prices back above $18 an ounce. Although gold captured most of the headlines as prices pushed above $1,600 an ounce, silver's move outpaced the yellow metal by more than 1%. And I'll stop right there because I noted this in yesterday's video outlining this very move. And I even mentioned in that video that silver was the winner of the day, but also cautiously warned folks that silver is a more volatile metal, and that if we start to see these take the same type of dips in the other direction, silver could really lose out a lot. Silver is more volatile than gold and has been performing that way for quite some time now, for some of the reasons that I've mentioned in prior videos. The article goes on to say that although says that the gray metal continues to hold on to most of Tuesday's gains, with March silver futures last traded at $18.28 an ounce, up 0.74% on the day. And here we can see that. Lior Gantz, founder of Wealth Research Group, said in an interview with Kitco News last month that silver's ability to outperform gold is a reason why investors should pay attention to the precious metal. But I will caveat that sentence too, because yes, for one day it did. But if you look over the past several weeks and even months, and even more than that, gold has been outperforming silver by a long shot. Hence why we see the gold to silver ratio where it is right now. In fact, here it is. It's narrowed down slightly, but it's still at 87.32 to 1. Gantz added that he expects both gold and silver to rally in 2020 as inflation could pick up for the first time in more than a decade as central banks around the world continue to flood markets with liquidity. We are already seeing investors start to anticipate higher inflation and buy gold in the first quarter before the data are really out, he said. When inflation does pick up in the second and third quarter, that is when we will see the buying increase. Higher inflation, Gantz said, is expected to push gold prices to $1,650 an ounce. However, he added that it's silver that is the real inflation hedge, and that is the metal to watch. I can see silver really catching up to gold in 2020, he said. There's no geopolitical premium in silver. It is a true inflation gauge in the marketplace. And that's an interesting statement. I want to pause right there because really, in a sense, there is some truth to that. Silver is reacting somewhat to what's been going on around the world, but not nearly as much as gold, especially with the increase. And so he's saying that because of that, it's the real inflation hedge and the metal to watch, meaning that maybe gold is a little bit overvalued at this point. And Gantz added that the pair trade between gold and silver, investors should be more overweight silver compared to the yellow metal. He added that he sees silver prices pushing to $20 an ounce in 2020. And I actually tend to agree with that. I think we might see that. In the current environment, Gantz said that he likes the idea of buying silver options, or investors should look at the best silver miners in the marketplace. I like to actually just get the physical metal. I'd rather do that and not have to worry about options or silver miners. He added that the silver miner he really likes is First Majestic Silver, not Fist Majestic Silver as it's shown here. The senior silver producer is currently a client of Gantz's investor relations company. Well, there you go. There is the bias in the article here, but it's not to say that there's not some truth in it either. Bar none, the best company in the silver space is First Majestic, he said. CEO Keith Neumeyer really believes in the mines that he owns. Nobody knows as much about silver mining as he does. Wednesday, First Majestic reported record silver equivalent production, 25.6 million ounces in 2019. The company also said that it generates a record $140 million of cash from operating activities. So they're doing well. And I've talked about First Majestic and about how they are utilizing technology and finding new sources and to be able to produce. And of course, we know that primary silver mining is down. We may have reached peak silver mining production from the primary silver mines, but it's also increasing as a secondary, and for the secondary as a byproduct of other metals mining. But here's the thing about there's no geopolitical premium in silver. I think that is an important statement because there was a time when geopolitics and other hedge or fear kind of tactics into the markets would have reacted with silver. And this goes back and kind of bolsters my point that silver is being traded as a commodity, maybe even more so. But if you take a look at the price movements today, a day after that pretty big jump, we're still seeing an increase in the prices for the metals. Gold is now, just after the close of the markets, is up to $1,612.30. That's up $10.10, a 0.63% increase, whereas silver is outperforming gold even today between these two metals at a 1.4% increase, a 25-cent increase. Platinum and palladium, they are really essentially, even though they're precious metals, they're commodities. They're not known as monetary metals or hedges against inflation nearly as much, and they're up dramatically, even more so. Palladium is now $2,765 an ounce. Platinum is now $1,011 an ounce. And those metals are trading at a higher percentage than silver and gold. So I think you have silver acting as a metal that is sort of stuck in between the platinum group metals as far as how it's being viewed, and in gold as being that hedge, that safe haven. Is gold overvalued? Potentially it could be. Is silver undervalued? I think still it probably is, even as such, even though it is being traded as a commodity metal. Make no mistake, silver will never go to zero. Silver could still go back down, but I do think we are at higher floors than we had seen in the past. In other words, gone could be the days of $14 and $15 an ounce for silver. But could it go back down to 16? Sure, I think that's quite a possibility. If we see these floors tighten up and we see the long-term charts for silver, and we're not seeing the lows that we had seen in the past in the metal. And I think that is a sign that it is really kind of doing what it has been doing for quite some time, and that is acting as a hedge against economic instability, number one, and preserving your wealth over a long period of time. And let's see here if we can pull this out. There's gold. Let's see if we can get the silver to pop up here and take a look at it. Silver. And then we look at it through the course of time here. Let's back this out a bit. And we can see that if we look through 2014, 13, where it was starting to come down off of its highs here, in 2015, where it got down to the 15s and 16s, and we look at this through 2019 and into 2020 here, it's starting to see, especially if you look at, here's 15, it's starting to creep up above that range starting in 2019. Could have come back down here to this point, $14 and $15. I guess it's possible. But I mean, you look here, it's kind of been languishing for quite some time until 2013 when it did get up to over $20 an ounce. But we're seeing much closer to $20 an ounce nowadays than we have in the past few years since 2016. So it's quite possible that it could creep back up to that point again. But, it's anybody's guess. This kind of the doldrums that silver's been in spite of the 2016 high here in this period of time, I believe has discouraged a lot of silver stackers out there. But keep in mind, it's a long-term hold. And, for those of you buy, you dollar cost average, especially if you're a pure stacker, you look for the lowest premium out there for silver. And, but here's the thing that I would caution you about. I think that it doesn't benefit anybody, I think, anywhere to make false promises about silver, especially in terms of their reputation or whatever agenda that they could have, because being realistic about silver is about understanding the fundamentals of what it's about and what it has done over the last 100 years and plus, and that if you keep that in your head and as the fundamentals, then you will not be disappointed if the price moves any particular way. I think having this bar here of $15 as sort of that gauge and guideline, we can see it here where it's dipped down just below that level a few times since 2015. And but by and large, it stayed above that and above the fray of that number. And where it goes from here, who knows? But the thing is that in the long run, I think it's going to end up preserving your wealth. It's just getting to that means to an end. But post your thoughts below. And remember, don't overpromise, don't over-expect anything from either precious metal. I mean, gold could take a dramatic hit in the next few days. You never know. We never know what could happen with the metals, but neither of them will go to zero, especially when you take into account some of these other more riskier precious metals like palladium and rhodium. And you take that into account and see where things are and understand the fundamentals, and you'll be fine. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.